what exactly are you trying to frame here in terms of the dollar itself? Are you saying its status as a safe haven is at risk?
Well, there are two aspects to the weaponizing of the dollar. The first is the fact is that the dollar is a dominant international currency in the world used for trade and financial transactions. This gives the U.S. an enormous amount of power when it wants to invoke financial sanctions on countries such as Iran and Russia. And even countries like China are very unhappy with the notion that they have to touch the U.S. financial system, the dollar in some way, which gives the U.S. enormous financial power. The other aspect of the weaponization of the dollar is what Mr. Trump is invoking. He's praised Mario Draghi, the head of the European Central Bank, for keeping interest rates low because he argues that keeps the euro's value low. And Mr. Trump, I think, would like a weaker dollar so that the U.S. trade deficit would be as high as it is right now. So both of these aspects, I think, create some concern. But the dollar status as a safe haven, I think, is still very strong and unlikely to be affected by any of this simply because there isn't any alternative out there.
That was going to be my next question. What do you think the Russians and the Chinese would use instead?
Now, one thing that is happening is that the Russians, the Chinese are setting up their own payment systems which can talk to each other. So Russia and China can now trade with each other much more easily than in the past without using the dollar as a vehicle currency. So the use of the dollar as an international payments currency, I think, is going to decline because of this weaponization of the dollar. But the dollar status as a safe haven, that is, as a store of value, is still very strong because American financial markets are still the biggest and most liquid in the world. And investors around the world, including American investors, seem to trust the U.S. more than anybody else. So that aspect of the dollar really hasn't been threatened yet.
Eswar, I think it's probably worth noting that if you look at what happened in early 2018, the dollar index came off. It started to weaken after this multi-year run. And then the U.S. announced the first round of tariffs on China. We started to take much more aggressive trade stance against other trading partners as well. And since then, the dollar index has rallied. So it's not like we're talking about a dollar that's not very strong right now. I wonder how much the quote-unquote weaponization of it would actually do in terms of weakening it against other currencies in the midst of all of these trade talks that continue.
That is a remarkable paradox about the dollar's dominance in international finance. Anytime the Trump administration tries to use tariffs or other ways of weaponizing the dollar or taking actions against trading partners or other allies, what happens is that this creates turmoil in international trade and international financial markets. And when there is turmoil in any financial market, everybody looks for safety, and the only place they still come for safety is the US dollar. So all of these actions may end up paradoxically strengthening the dollar. And the other reality is that the U.S. economy may be softening, but it is still doing much better in terms of growth momentum than many other areas in the world. Europe is having a hard time of it. Japan is not doing that well. China seems to be slowing down. So relatively speaking, the U.S. economy is still in pretty good shape. The latest jobs reports seem to confirm that the weaknesses may not be as strong as we thought they were. So all of this suggests that there is still some room to go for the dollar to remain strong.
How much credence do you put in the president's claim that the ECB or the Chinese are trying to devalue their own currency? And would you expect Treasury to expand its list of manipulators?
Now, Treasury is already taking actions to weaken the criteria that are used to identify countries as currency manipulators. So many more countries could potentially be caught in the currency manipulation net. Now, for China in particular, the notion of weakening the yuan in order to offset the effects of tariffs is a very dangerous ploy because there is the risk that you could set off a currency depreciation capital outflow spiral that sort of feeds on itself, as happened in late 2014, early 2015, and so on. So I don't think they're going to look to play that game. For the European Central Bank, certainly having a weaker euro is going to be helpful in terms of fending off the effects of domestic or weakness in the euro area zone. But I don't think that's a primary channel that they're counting on. But all of these measures to loosen monetary policy in other countries is certainly going to get Trump's hackles up, and that could mean much more trade tensions ahead with all of America's trading partners.